What is up, everyone, and welcome back to Explain the Charts. Today, on October 30th, 2025, we are diving deep into Litecoin, ticker LTCUSD, which is experiencing a massive surge of interest and volatility. The big catalyst is the groundbreaking news that has hit the market this week. Multiple sources have confirmed the launch of the very first spot Litecoin ETF in the United States by Canary Capital, which reportedly went live on Nasdaq this past Tuesday, October 28th. This is a monumental event for Litecoin, opening the door for a new wave of institutional and retail investment. As a result, headlines are buzzing with bullish predictions, with some analysts eyeing targets as high as $135 and even $150. We've also seen daily trading volume for LTC explode, shooting up over 70% to more than $1.1 billion, signaling a huge influx of activity. Now, let's see how this massive fundamental news is translating to the price action on the charts. Starting with the daily chart for the big picture, we can see it's been a wild ride for Litecoin over the past year. After a powerful rally in late 2024 that took the price from the $50s all the way to a peak of nearly $147 in early December, we entered a significant correction phase. The price has been making a series of lower highs throughout 2025, indicating a broader downtrend for most of the year. We saw extreme volatility, with a sharp drop to the $80s in March, a brief recovery, and another significant leg down to the $60s in April. This brings us to one of the most dramatic days on this chart, which was October 10th. Let's zoom in on this specific candle from October 10th because it tells a story of extreme volatility. On this single day, the price opened around $126, wicked up to a high of nearly $136, but then flash crashed all the way down to a low of about $55. It was a massive liquidation event that wiped out a huge amount of leverage before the price quickly recovered to close the day at $97. That $55 low is now a critical line in the sand for long-term support. Following that crash, the price entered a period of consolidation, mostly trading in a range between the low $90s and the low hundreds of dollars. Now, looking at the most recent candles, we can directly see the impact of the ETF news. Starting around October 27th, we see a powerful three-day surge, which is the market reacting to and anticipating the ETF launch. This move propelled Litecoin from the mid-$90s, smashing through the critical psychological resistance at $100. The candle for October 28th, the day of the launch, shows a high of nearly $107, but it also shows a pullback, closing back below $100 at $96.65. This suggests some sell-the-news activity, where traders took profits after the official announcement. However, bulls fought back immediately on October 29th with a strong 2% push to reclaim the key level, closing at $98.56 after touching above $101. Let's switch to the 1-hour chart to get a better look at this recent price action around the ETF news. Here we can see the battle for the $100 level in more detail. On October 28th, we see that massive spike up to the $106.92 high, followed by a very sharp rejection all the way back down to the $95 support level over the next several hours. This confirms the sell-the-news pressure we suspected from the daily chart. The price then based at that $95 level before beginning its next leg up on October 29th. That climb back above $100 was not a straight line. It involved several tests of resistance before finally breaking through. This shows that while the news is bullish, there is still significant selling pressure above the $100 mark. Switching quickly to the 15-minute chart, we can appreciate the intense intraday volatility. Look at the rapid swings on October 28th, from the peak above $106 down to the low near $95. Each 15-minute candle represents a battle between buyers excited by the ETF and sellers taking profits. This short-term view highlights how choppy the trading environment is right now, making it risky for leveraged traders without a clear plan. The fight to reclaim and hold $100 on October 29th is also very clear on this time frame. Okay, back on the daily chart, Let's establish our key levels based on everything we've seen. For resistance, the first major hurdle is the recent high set on October 28th, right around $107. A convincing break and hold above this level would be a strong bullish signal. Above that, the next significant resistance zone is the area before the flash crash, roughly between $125 and the October high of $136. Finally, the ultimate resistance in this time frame is the December 2024 peak near $147. On the support side, the most immediate and critical level is the psychological $100 mark. Holding above this is key for bullish momentum to continue. If we lose $100, the first support area is the recent consolidation zone between $95 and $97. A break below that would be bearish and could open the door to a retest of support in the mid-ADS. The absolute floor remains that flash crash low around $55. So, what's the bullish case from here? The bull case is straightforward. The spot ETF is a game-changing fundamental catalyst. If inflows into the new ETF are strong, it could create sustained buying pressure. Technically, if Litecoin can establish the $100 level as solid support, it builds a strong base for a move higher. The first target would be to break the $107 resistance, which could then propel the price toward the $125 to $135 range in the short to medium term. Now for the bearish case. The primary concern is that this was a buy the rumor, sell the news event, as indicated by the sharp rejection from the $107 high. If the price fails to hold $100 and decisively breaks below the $95 support level, it would suggest the initial hype has faded. This could lead to a full retracement of the ETF pump, sending the price back down to the low $90s or even the $80s. We must also remember that the broader trend for 2025 has been bearish, with a series of lower highs. Until we can break the previous major high around $136, we are technically still in that long-term downtrend. To recap, the key price levels to watch are crucial. Immediate resistance is at $107, with major resistance at $125 to $136. Immediate support is at $100, with major support at $95, and then the mid-ADS. Now for some unbiased predictions. I believe there is about a 60% probability that the bullish momentum will continue, given the significance of a spot ETF. In this scenario, we would see some consolidation around the $100 level before a push to break $107 and target the $125 zone in the coming weeks. The likelihood of this increases if we see several consecutive daily closes above $100. Alternatively, I see about a 40% probability of a bearish reversal. This would be reinforced if we see a decisive daily close below $95. In this case, the ETF excitement was short-lived, and we would likely see the price fall back into its previous range in the low $90s. The main thing to look for in the coming days is whether buyers can defend the $100 level. Also, keep an eye on news regarding the trading volumes and inflows for the new Canary Capital Litecoin ETF, as that will be a major indicator of sustained interest. That's our analysis for today here on Explain the Charts. As always, this is not financial advice. Cryptocurrency markets are extremely volatile, and you should always do your own research before making any investment decisions. Thanks for watching, and we'll see you in the next one.